In this video, I'm going to give a brief overview of the alpha testing Range Hunter module. Here are all of the settings, and I'll go through them in just a minute. You'll notice right away, that's a typo, there are no confirmations, so ignore the typo. This is just strictly one layer. So let's set this to a smaller time frame and begin discussing what these actually mean. Range Hunter is a volatility and trend analysis tool, not a volume analysis tool. Even if the spread line touches zero, it's not necessarily going to analyze the entire volume. This is the minimum price of analysis, whereas this is the maximum price of analysis. It is important to understand that these boundaries are 10%. So from the buy marker, this is boundary 10. From the sell marker, this is boundary 10. So let's begin looking at the buy markers. So boundary 10, let me see if I can find a chart that shows more volatility. Okay, so let's start with the sell markers since we have one. This is boundary 10, or 100% of the range. This would be 0% of the range. Boundary 9, boundary 8, boundary 7, boundary 6, boundary 5. Now that is the median, or 50% of the range. Boundary 4, boundary 3, boundary 2 would be right here, and boundary 1, the lowest setting, is right here. Now these are 10% breakdowns. The same is true for selling, for buying. Boundary 10 is here, boundary 9 here, boundary 8, boundary 7, boundary 6, boundary 5 on the median, boundary 4, boundary 3, boundary 2, and boundary 1. Now, buying cannot buy at the highest level, and selling cannot sell at the highest level. So let's reset these. You can go to the full daily chart and actually see the history of the asset from beginning to end if it's not very long, in the case of this one, and actually go back to the very first candle. And you will see some weird stuff. Okay, here is the very first candle of Adam. and you'll notice these markers are way off. That's because the data is off when it was first introduced. Now we're going to play with the boundaries here and demonstrate what happened. Okay, boundary 10 for buying, boundary 9 for buying, boundary 8 for buying, boundary 7, boundary 6, boundary 5. As you can see, it's very strange at this part of the chart. The irony is the mathematics are correct, but the chart sequencing is not correct. So here we go for the buying. Now buying has rules, and so does selling. Very strong rules. Range hunter will not buy unless the first candle is below the boundary and the second candle is above the boundary. And this is specifically with relation to the price action or closing price. So when you're buying, the closing price must be lower on the second candle than on the buying candle. So it must be going in an upward direction for buying to take place. And it must cross the boundary. The same as selling. Selling must cross the boundary as well. And it must be moving in a downward direction for selling. So as new coins begin to develop, you will see strangeness in the mathematics. But that strangeness differs based upon different charts. For example, let's go back to the beginning. Shrink it up. Now let's see if we can go to 4 hours. So you see on the daily chart, it was a bit messed up. But when you break it down to the 4-hour chart, you see what looks like more sensible trends and values. So, selling boundary 1, boundary 2, boundary 3, boundary 4, boundary 5, the median. Notice they disappeared. Boundary 6, boundary 7, boundary 8, boundary 9, finally boundary 10. Now for buying, boundary 1, boundary 2, boundary 3, boundary 4, boundary 5, boundary 6, 7, 8, 6, 7, 8, 9, and 10. So the age of the asset plays a big role in how this chart is displayed. And as you can see, it can be quite interesting. So here is the beginning of the asset using a 4-hour chart. And the very first candle that started Atom, right here, had a low of $3.50 and a high of $4.7. And you can even go down further and break it down more. Range Hunter will work in any time frame, but smaller time frames won't show as much volatility. And with Range Hunter, a healthy market always gravitates towards its median. An unhealthy market will go in one direction or the other. Now, crypto doesn't really show it very well. But you still see here, it dips below the median, then it goes back up, then it dips, then it goes back up. This is normal. Same thing, you see the cyclic effect. Now here is a coin that took off in 2021. But if you zoom in and pan this part out, there you go. This looks normal, hovering around the median. Truthfully, this part looks questionable. And you could potentially make the argument that this is manipulation, although it has a significant correction back down towards its median. But still, coins that do this kind of steep jumps, I'm leery of. That's right, a high of $700 for BNB. That is very questionable, especially considering the prices that it spent a large amount of time close by. So $45, $50 jumps up to roughly $150, and then it takes off. Well, here we're at $340, $350, and then it starts climbing to the moon. Almost $700 a coin. That is questionable in my opinion. It's also one of the reasons why I personally don't trade BNB very often, because it just looks iffy. BTC, again, you see plenty of points where it reached its median, but still, this is too long of a run. not to have a significant correction, which we finally did in May. So anytime I see long runs like this that don't cross the median, I automatically think more defensively. You cannot sustain a market this long and not have an aggressive and steep correction. That is simply bottom basic economics. When you're dealing with trading, the median is what the average price is going to be most of the time or fluctuate around. This is overpriced. This is undervalued. That doesn't mean it can't grow and still correct itself along the way. But this is not a healthy way to do it. Here's another coin. Hit its medium, drops back down to undervalued, cross the median, drop down, cross the median, drop back down to the median, cross the median, and set a new high, drop down, and then set two new highs. But eventually it dropped back down to the median, and then it dropped below the median. Normal cyclic behavior. Not something bull market people want to hear, and not something bear market people want to hear. But you have to have that normal cyclic approach. Same thing with this one. A normal cyclic approach that hovers around the median. Same thing, this coin hovers around the median even though it routinely makes all-time highs. You still see it gravitating back down to the median once it gets overvalued. Another example of a normal market gravitating towards the median. Gets too high, sharply reduces, and now it's below the median. It's important to remember that in a genuine market, supply and demand is going to be what determines price. The price should average around the median. A high demand with little supply is going to mean higher prices. No demand with too much supply is going to mean lower prices. So this is where a balanced market should be on a general context, always hovering around the median. And some coins you'll see they have questionable metrics to begin with. Here's a coin that since its inception has made consistent lows and hasn't once in its entire life made an all-time high, except for the day it was released. I avoid these coins as well. It's showing some hope because it crossed the median. But for the amount of time it's been on the market, this type of a run makes me really not want to deal with it as an asset. Here's another coin with strange behavior, but you can see the run and then the balance. It took a huge correction as well. Because the coin gravitated back down towards the median and corrected appropriate to the run, it's a healthy market. It's not necessarily a market I would want to be in, but it's a healthy market. If I were to trade this market, I would trade it on these boundaries. and I would trade the 60 boundary for purchases and the 60 boundary for sells, giving me a 20% radius. But as you can see, it takes a long time for these to achieve these boundaries. Here's a coin that has a bit of a jaded history. It's a difficult one. A lot of people question its value. And, well, it's another one that hasn't really changed its all-time high, but it has made new all-time lows since its inception. It's a coin I've traded, but one I've done so very carefully because it's just not that great of a coin, as the true market metrics really show. It stays within the 10 to 20% mark of its value fairly consistently. ETC, the coin Ethereum holders love to hate, but it's a healthy market for the most part. I say for the most part because there are a lot of questionable situations about this coin. Generally, I don't like coins that really have all-time lows on a reoccurring basis, and it seems to be famous for that. And only up until recently, it made an all-time high. And then it took a huge correction. So that's things you need to be aware of when you're working with this coin. It can be very difficult. Okay, ETH. Oops, let's get back there. Another coin that hit its all-time high had a huge correction. And here, if you take a look at this run, I don't necessarily consider this very healthy because it took almost a year, actually 6 months before it touched the median again. So half a year of staying above the median. I don't like coins that have this kind of a long run because this is the end result. A very sharp, short run back to the median. This is 50% of the ranged value of what the coin was worth at its highest point. I don't care for these kind of coins just for this reason. I'd rather have a slow, progressive run downward that matches the run upward. But more often than not, this is typically what you will see in the market for coins that exhibit this kind of pattern. Okay, that's a stable coin. Another coin, it had a good uptick, then it took a brutal correction. But the correction was not as steep, comparatively speaking, in terms of one quick bounce. So it corrected, rebounded, corrected again. It climbed, small correction, and then it climbed to all-time highs. As much as I'm not a fan of this coin, it's still what I would consider reasonable market basis. It shows hope, though I'm not fond of any coin that consistently makes all-time lows. This coin is a bit of an anomaly. but it still shows a clear pattern that I've been mentioning. You have this long run constantly at the top of its run with very short corrections and then a sharp correction. And this correction is very sharp, 50% of its total volume in a very short period of time. Long runs aren't good. Long runs mean sharp, brutal corrections. Short runs, short corrections. Remember the cyclic effect. Price action needs to rebound and bounce off and around the median. That shows a healthy market with healthy supply and healthy demand. When you start seeing too much of an upswing, then you have more downswings. Although this coin looks reasonably good because you see it's not crazy. You have moderate corrections along the way, and you have moderate peaks along the way. So, this is the basis of Range Hunter. This is the kind of stuff Range Hunter can help you see. And it doesn't just work on crypto. It works on stocks as well. Let's take a look at something that's been around for a very long time. And you'll see exactly what I'm talking about. It hovers around the median. This is what a healthy asset looks like. That's not to say it can't make all-time highs and all-time lows, but you balance out the climbs. For example, here's a good example. Back in 1999, it made an all-time high. Now think how many years ago that was. Then you see it corrected, got close to its all-time high, corrected, and went below the median. And as you can see back in history, you can see when it paid dividends, and you can keep moving back. Now, I personally don't like the fact this particular asset and period didn't drop closer to the median. So, when you look at your assets, look at the range. This dropped a little over 30%. But still, this is 40%. It didn't get near the median for a long time from 1987. So, that's not to say it's not a bad asset, but I don't like assets that don't hover around the median on a regular basis. Climbing too much is growing, but it could also be manipulation. It could be artificial profits. There are a lot of reasons that could cause the price of an asset to continually climb and not hover around its median. And those are things that you need to be aware of prior to investing into them. So you don't want to invest into an asset that doesn't have a consistent cyclic value. And I particularly would not invest in this kind of an asset at all, knowing the history of this product. Up to here, it was fine, regular, balanced, reasonable. You see the normal up and down swings, including where it crosses the median. What I consider a normal process. But that is the point of the whole process. Understanding and analyzing the market in a way that you understand its risks. Let's take a look at a hotbed right now for the U.S. government. Here is the whole history of XRP, or Ripple. Not very impressive. But you could see several points where it has strived to reach its median. And it's made all-time lows. No all-time highs since its inception up until recently. I've traded this coin in the past, and even when you look at smaller time frames, it's good for short term. Long term, I don't particularly find it something I want to be in on a long term, because it stays channel locked quite often for a good amount of time. So let's actually show how we would trade this. Well, first of all, like I said, the buy boundary of 6 and the sell boundary of 6 is a good place to start. Now let's add the DCA module. Now I'm going to drive this entirely by the strategy. I want historical data only. And now let's turn off all the graphic noise. There we are. And as you can see, it does quite nice. Let's get to the end and see what the price value is. No, I don't want that. Okay. 17% profit, 10 trades at the 1 hour mark. 1 hour mark is roughly 208 days. But the highest amount of accumulation is 8 trades. So this is not bad for a long-term holding situation. It certainly fits the coin. Now, if you wanted to go strictly by take profit versus strategy, let's darken this. For now, let's turn this off. And for now, let's turn this off. 51 trades at 4%. That's still pretty good. So, you can balance out long-term or semi-short term. Let's see what happens if we go down to the 30-minute mark. 30 trades. The 15-minute mark, 29 trades. The 5-minute mark, or roughly 1 month. 22 trades, 1 month, using pretty much 20% boundaries. And a take profit. Now, if you use sell by strategy, you're obviously going to be a little bit more in the waiting, as you've got to wait for it to hit the 60 boundary for the selling point. But still, your profits might be worth it. So you have to balance risk versus reward in terms of how much you want to hold. Personally, 22, 44, 66% profit, I can live with that. But it's not much different than so 66 versus 25. In this case, it is different. In a lot of cases, though, it's not that different. A lot of cases, it's only like 1 or 2% off between strategy and take profit. In this case, though, it is quite a bit different. So I would definitely recommend this approach. And this is just using the standard 2% deviation, 2% take profit. But using Range Hunter boundaries as the filtration level. It's probably gone a little bit more in depth than what I really should have for this video, but Range Hunter is a unique tool, and you need to have unique understanding about it, including the fact that no matter what, it is not a retracing tool. Even when you sit and watch, deliberately trying to catch it in retracements, you won't find it there. I've spent months trying to catch retracements for coins right on the boundary. It doesn't happen. Not easily. And I've only actually done it now with the old version. The new version, I've not been able to do it at all. Let's see if we can get it. Okay, here's a coin. Notice we caught it just right. It crossed upward. It's stuck. The new version doesn't retrace. Not easily. You really have to work at it. And it has to cross this boundary, which means it's going to have to go back down below this boundary and back up above this boundary before another sell signal is going to take place. Or excuse me, before another buy signal. Selling is the same. You have to have that boundary crossing. So hopefully this will help shed some light on the new module and prepare you for using it. Because as the market continues to get crazy, only careful analysis is going to make you any real profit in the long run. And whether it's short term, medium term, or long term, the new Range Hunter definitely provides a very good amount of details. Like, subscribe, share this video if you know somebody that needs it. Leave comments if you have any questions. And most importantly, follow within the support server. Be sure to visit the Alpha channel frequently for updates and report any bugs you might encounter. Until next time.